Okay, here we are. Hello everybody, welcome to this live webinar. As usual, my pleasure to be here with you all guys on fxtrade.com team. Hi Adinda and Annie. And this is the fourth webinar already of the Beginner's Corner. I don't know if you guys have seen the page, but I will ask all of you a little favor, okay? I will ask you to please check the page. Hi Rami, nice to see you. It's inside fxtrade.com education section, right? And it's my first baby, let's say, right? So I will accept any advice you have to share with me, concepts. I really have choose a grade of stuff to share in this page. Besides, in today's highlights, I personally choose what to talk about every day. I change it once a day, right? Early European morning. So if you guys want to take a look at this, I will be very grateful, okay? Please take a look and let me know what you think, what is missing, what you want to see in here, and whatever idea you have regarding your Forex education, okay? Anyway, I will remove the chart, the page, and we are going to place the chart while we start today talking a bit about support and resistance levels, right? The idea is that the base of all technical analysis rests on two fundamental legs. One is the concept of support and resistance, and the other is based on trend, right? And believe it or not, both behave the same way, and we are going to talk about it now. In one word, let's say that a support is the zone on the market actual price, right, where demand strength is powerful enough that to offer to halt the downside rally, right? That will produce a stop of the bearish movement, right? Followed usually by a bullish rebound. On the contrary, a resistance is the zone above market actual price, right? Where the offer strength, right, is more powerful than demand and will produce a stop of bullish movement followed by maybe a bearish rebound or at least some consolidation, okay? So, we understand that support or resistance is zone where inside bullish or bearish trend, offer and demand are quite balanced, right? That's the concept, enough to stop the price rally or even produce retracement. In a bullish case, this will be valid until offer is exhausted, right? In that case, resistance is broken, price continues, and we see higher highs. In a bearish case, on contrary, when demand is exhausted, right? Price broke the support and move on. But generally, we said that when either a resistance or support level is broken, right, it turns into the opposite, right, for further price movement. So if we break a support to the downside, that level will turn into a resistance in future bounce higher, right? And another thing that seems pretty interesting to notice is that the difference between actual price and resistance 1 should be at least 3% of the daily amplitude of the pair. That's a very common rule according to theoretical concepts. However, I will develop several ways to determinate support and resistance area, and we are going to see some tips and tricks about which one could be more useful for what or where, right? But in other case, we said if I was talking about the 3%, sorry. So if a resistance support is not broken by at least the 3% of the daily amplitude of a certain cross, theory says that the point is not yet broken, right? But consider the case of euro, for example. We moved 100 pips a day lately? Yeah. So the 3% would be just 3 pips, right? So it's a bit poor to confirm such movements. I usually wait a bit more, and additionally, I add the spread to that level. So honestly, I don't find that too much reliable as concepts. Anyway, the strength of the support or resistance level, despite whatever tool we use to draw them, right, will increase as more times price bounces or rebounds on it without breaking, okay? And as much as it lasts a long time, right? If the level lasts for 1 day, 2 days, 3 days, 4 days, well, that level will turn into a very strong support or resistance area in the intraday trading, right? So as much as it lasts, stronger will be. And at the same time, as stronger it is that level of support or resistance, the stronger will be the potential after the break, okay? So if we have a tough resistance level, okay, and it's suddenly broken, the bullish momentum will probably be much more interesting than previous movements before the break, okay? That's what we know why. That's because we know that we are all seeing more or less the same, right? We all use the same Fibonacci retracement, the same pivot points, the same moving average. So when we saw, for example, a resistance level broken, it's because we know sellers have placed their stops just above those levels, okay? That's why we have seen such acceleration. And usually when a resistance or support level is broken and we see those long volumes that I told you represent a strong volume in the market, the break is even more reliable, okay? Usually what we see in the market when price attempts to break is a spike above the resistance or below the support, right? A small retracement to test back the level, and if the price is unable to recover above or below it, right, we call that a pullback, and there's a good chance that from that level the trend will start developing, okay? But anyway, I'm talking a bit too much. The idea today is to talk about the different ways to determine support and resistance level, right? I know we have talked about this a bit of past session. The first one of the most useful also, is the art of Fibonacci retracements, right? Based on mathematical calculations, the fact is that you can add any kind of levels you will like, but we consider that the 61.8, the 50% retrace, and the 38.2 of the retracement of the Fibonacci are the strongest levels to watch, right? Those will act as support or resistance area in rallies, and the break of that support or resistance level will suggest a continuation to the downside in the particular crossing study, right? I usually said that once the pair breaks below the 14.6, that is not a very common level, but I tend to add it, right? There's a good chance that we are going to see a test of the 23.6. The fact is that today has been the last days, has been pretty fast, right? However, there is something that sometimes we miss a bit with Fibonacci. It's the fact that once below the 23.6% is a bit more common level, right? There is in fact no real reason to see the pair reaching the 38.2. As we discussed past class, the pair could reach 33, 35%. In fact, if you calculate the Fibonacci with a 34% in between 33 and 35, you will find out that almost 90% of the times the pair reach that area, particularly in European currencies, euro, pound, and Swiss franc against dollar, right? After breaking the 23, right? They may turn a bit shy of the 38. However, the break of the 38 is telling me that there's a good chance of the post, okay? So determining a support and resistance level is not just setting their probable area where the pair should stop or will reach. We don't know if the pair will reach that area. We don't know if the pair will stop around that level and bounce or continue or break and continue. We have those levels to have an idea how long the pair could fall when in a certain day, how much it could bounce, on how long in time the trend will extend, right? I don't know, let's say that like today, right? I will erase this Fibonacci retracement, okay, and I will place the daily chart, and let's say that what happened today, right? Sorry, I want to enlarge it, and I did in fact the contrary. We have been talking about the strength of this 4140 area in several occasions along the webinar daily analysis, right? So the pair reached this level and bounced back higher. How or what is telling me that there is no chance the pair will break below, or there is a good chance that the pair will break below. What I tend to do is watch the time of the day a pair reached such a strong extreme, right? In this particular case, the euro has been already moving 170 pips, even almost 200 pips daily high. So if the pair has already fallen 200 pips, right, by the end of the European session and in the middle of the American one and Friday, right, we'll see volume decreasing quickly at this time of the day, right? So we actually can be 99% sure that the pair will not break below that level because it has already overcome the intraday range, right? It has already moved the 200 pips. However, if the pair starts the day, I don't know, when Nikkei opens, right, barely 10 pips above that 4140 level, right, and it overcomes it, there's a good chance that the pair will break and continue to the downside, okay? So that's one of the factors I always consider when taking a look at where are my support or resistance level. It's not just determining where price will halt or break, but also we have to use a bit of logic, right? And consider the fact that there's a good chance the pair will probably bounce. Maybe it will break it for 10, 5, 2 pips, but it will not be able to continue after completing such an intraday rally. So that's something you should take into account when the pair reaches, or you consider, is this level broken or not? I believe that the timing is the hardest part in the first market, right? Is the right time to get into the market now or not? Well, in this particular case, this is a way to see if it's the right moment to get into the market or not. I was following earlier today another kind of support or resistance level, right? And those are the trend lines, okay? The trend lines act as has the same function as support and resistance as we discussed, right? As many times the pair bounce on it, the stronger will be the break higher. We have seen a pullback. In fact, I have taken trade barely below the trend line today, right? Because I have seen 1, 2, 3 candles completing a pullback to the trend line and finally price accelerating lower. Of course, Greece has helped to this particular case, right? But anyway, the same rules that apply to any static support or resistance level also applies to trend lines, right? We consider trend lines support resistance areas, in this particular case, is support that has been broken in the middle of a strong bearish movement that shows volume and acceleration. We have seen the pair completing a pullback, and we have seen the pair finally resuming the bearish trend. Okay, so this is the kind of analysis we can do. I believe that this is just enough to trade. We need support, yeah, from technical indicators, maybe when we start trading. But at the end, you will find out that as simple as better, right? And at least this is one of my favorite ways of taking a trade in the short term. Of course, the same applies to every and each single time frame. As I told you several times, sorry, keep in mind that when we talk about pullbacks to support or resistance level, we are not referring to Japanese crosses. Japanese crosses hardly complete pullbacks, right? I believe that's the pair that less pullbacks accomplish, followed by Canadian dollar currency pairs, okay? Not Japanese yen pairs, not Canadian dollar pairs tend to complete pullbacks. Anyway, another form of determining a support or resistance level would be looking at historical highs or lows, okay? When I start my day, okay, and let's suppose that we are starting the day at current 41.88 area, I will be looking at my forward chart and for intraday trading, right? Levels where the price has halted several times in the past. I believe that in the forward chart, this is one of my favorite ways to determine support and resistance level, right? So if the price is 41.80, I will try to look the first one to the upside, right? I just drop the line there, okay? Not actually there. We are going to take a look, right? And try to find a zone where I can see several highs and lows, where I can see the price has halted several times in the past, right? And at least that level should be I don't know, in between 30 and 50 pips away from current price, okay? It has to give me space to breathe in the middle and maybe take trading decision, right? So I will try to find, right, if at least 3 levels to the upside, right? And at least 3 levels to the downside for all the day, okay? Why 3 levels? Well, as I told you, I will take into account the intraday range. In the case of euro-dollar, we are talking about a pair that moves 100, 120 pips a day, not much more. So you could take a look from current price to the highest area. I have 160. So it's enough for my intraday trading, right? And the same I will do to the downside. I will watch for the levels I do believe, or I do see that we have several intraday highs and lows, and the price will probably halt and stop and probably bounce. The idea is that we are not talking about an exact 41.31 fix, right? We are talking about the 41.30 area. The pair could halt 10 pips above, 10 pips below, right? But that's the level and the area. So as quicker the price approaches to the level, as more attention I tend to pay to the movement in the market, because I know that there's a good chance either break or either bounce. That will depend, as I told you earlier, in the number of pips the pair has moved in the past. However, it's not enough to take a look at the chart, right, and see what has been happening over the past couple of weeks, right? I will move my charts, right? And I won't be seeking just in this last screen for support and resistance level. I will try to move my charts at least two screens back, right, to see the price behavior around those levels, okay? To see if the levels had also act as support and resistance areas once the pair has been on that zone, and see what we find, right? Pair has been acting around those levels, and some are stronger, some are weaker maybe, but that's how we can determine support and resistance area. Remember, 3 to the upside, 3 to the downside, in between, I would say 30 and 50 pips from current price in between each other also, and it will be of course related to the intraday bond, right? In pairs, I don't know, like pound crosses. You would prefer to set longer support and resistance areas, as well as when you calculate those areas of probable target zones, where when you calculate those stuff, you need to add the spread, okay? Remember that part, because I would say that a support or resistance is broken in euro if price action overcomes it by at least 8 pips. If the level is overcome by at least 8 pips, there's a good chance of a price continuation in here. However, don't forget to add the spread, okay, for trading proposals. On the contrary, if we are talking about pound Japanese yen, I will wait at least to see 13, 14 pips away from that level to consider the fact that the support or resistance level is broken. Anyway, another way to determine support and resistance level is using famous and so very well-known pivot points, right, of the daily charts. Okay, this is a calculation based on yesterday's daily candle, right? This is an automatic indicator that comes with MetaTrader. The blue one, in fact, it's weekly. It will appear back every time the price changes, so we are going to leave it there. But the daily pivot point is, in this particular case, 42.77, right? At the end, this is an average price also to where price is supposed to tend, right? We said the price, the mass psychology tends to push price over one day to previous one pivot point, okay? That's why it's called a psychological level, right? Because using past session information, I could estimate where the price will be heading over the next 24 hours. There are different ways to calculate it, right? Some even include the opening of current day, but that's mostly used in stocks. The fact is that as in Forex market, you use the classical calculation. Sorry, I will enlarge a bit the chart, okay? with the classic calculation. So today pivot points, right, these levels that we are seeing draw here will depend on this bullish blue previous candle, right? The high plus the low plus the close divided by 3, right? From that on, I start to calculate my resistance 1, resistance 2, resistance 3, support 1, support 3, and so on. In fact, there are several intermediate support or resistance level that could also be calculated for even shorter trade, right? The first support will be 2 times the pivot point, less the previous day high, while the first resistance will be 2 times the pivot point less below, right? And as an example, I believe that you can find those levels anywhere around the internet, right? But let's see how we apply this support or resistance levels, right? In this particular case, you can see that today's price action has started above the daily pivot point, right? And in the theory, we said that if the day starts about that level, the day will be bullish. While if the day starts below the pivot point, the day will probably be bearish, right? However, it's not always like that. But the support and resistance level are pretty much valid. As you can see, price wasn't able to overcome resistance 1. We have seen the pair 4 or 5 pips away from the resistance 1 today, losing momentum, breaking below the pivot point, heading quickly towards the support 1, and then to support 3, even lower, right? It's very, very unusual to see prices overcoming support 2, in intraday trading, right? So in this particular case, we are seeing a strong bounce also. That's another way to determine, okay, the price will reach this area and that's it. I have to take my profits from selling because it could extend the line. Yeah, it could. But there's a good chance that it won't. We have static support, the second support according to pivot points, right? So it's making the level even a bit stronger to downside. Anyway, sorry, what I want to share with you, right, is that there are simple tips to trade with these pivot points, right? We do calculate them as support and resistance levels, right? But it's better to determine first the trend in the 4-hour chart. I won't be thinking that if the price opens above the daily pivot point, there's a good chance to get test of resistance 1. I won't be thinking below, if the day starts below the pivot, then we are going to see a selling rally. I just take my trend in the 4-hour charts, right? And in that particular case, I will set my entry point, right, with probable profits and probable stop losses, even before starting my day, right? I will take my trading decision full, all in one. I will say, okay, this is my daily pivot and price is open above it, and this is also valid for another kind of support or resistance, right? I will be selling, I don't know, maybe 10 pips below this level, right? I will be selling around 42.68, right? And I will be targeting, I don't know, 42.35, right? 35 pips. But I will place my stop at least 5 pips or 10 pips above this level plus spread. And I will be profiting around this area. Okay? That's a complete trade. The trading decision is not just buying or selling. It's buying or selling, but plus stop plus limit. Okay? Keep that in mind always. If you don't know where you're going, then better don't go. Okay? So that's very, very important. In whatever you consider trading, keep that in mind always, right? Anyway, the idea is that when trading with pivot points, we are going to enter long positions in the trend is up and price is turning in an upward direction from the pivot point, right? And in daily start, okay? But we are going to sell if the trend is bearish, according to the forward chart, and price is turning in a downtrend direction from the pivot point, right? Remember, it's not common for prices, I was saying, to overcome support or resistance too, right? And if they pass through support 2 or resistance 2, the fact is that there is a good chance that it will be approaching to number 3 pretty fast. But break of this last resistance or support tree, right? We are probably at the beginning of a strong trend developing. So keep that also in mind. Break of support or resistance tree will tell me that a trend is starting to develop, a more interesting trend, not a short term, not an intraday trend, right? Keep in mind that when coming to pivot points, okay, it's not a good idea to use United Kingdom charts. I never test pivot points in Australian platforms with the Australian daily close and daily highs, meaning I am not neither any Asian one. But I discovered that when you apply pivot point strategies, if you use the United States time zone, right, any kind of United States broker MetaTrader, you will find out that any trading strategy involving pivot points is 100% reliable compared to any other time zone. Something pretty funny, but true. I have proved that on several charts. Anyway, keep in mind that when we are trading also with pivot points and using this kind of support and resistance levels, it will be more interesting to apply it to high volatility pairs, okay, and wide range movements, okay. It's not the best strategy to determine support and resistance level for the Latvian trend that barely moves 50 pips a day sometimes, right? This is for crosses that move above 150 pips. Because if we are talking about a pair with a small intraday range, we will see that the distance in between the support and resistance levels, right, will be in between the different levels, will be, I don't know, maybe 15 pips, right? So if I have to add a spread to that, my trading will not be really worth it, okay? It's not a good idea to use it in low intraday range pairs. But as higher the range the pair moves daily basis, right? The longer the distance in between levels, the more clean zones I have in between one level to the other to trade, okay? That's the general concept. Keep that in mind also. Anyway, another way to talk about or to determine support and resistance levels is using moving average, right? You can choose almost anything you can imagine when you are using moving average from, I don't know, 2 periods to 2000, right? You know that I love the 20 simple one, right? And that's one of the best intraday moving average we can use to trade as just in the short term. You know that when moving average are just in fast trend direction indicators, right? Calculate again an arithmetic average of price for a specific period. But the idea is that this moving average, these averages we are seeing in the market, tend to smooth the price data, right, to form a trend following indicator. Keep that in mind. This is a trend following indicator. They hardly predict direction, right? You know that moving average are also lagging indicator, meaning price will probably turn before the moving average, usually, right? But at least once the trend is developing, it will give you a good lead of where it will continue or not. It will tend to act as dynamic support, or resistance level, right? As clear as the slope in the moving average, as reliable is it a support or resistance area, right? We have seen the pair being guided by this moving average since early January this year. Okay, the moving average has been holding the bullish tone. This is the first time we are turning bearish, right? In all this year, it's the first time the pair is gaining bearish low. Despite maybe it's not going to give me a selling signal by itself. The fact is that it's telling me that the trend is turning to downside, and at price would probably halt around this level. Okay, it will keep the upside limited. There's a lot to say about how to use moving average and when and why. The fact is that you have to test them and just keep in mind the idea that the longer is the moving average, okay, the more will be lag. Okay, they will lag more. A 10-day or 20 days, like this one moving average, right? Will probably be more close to the price and be more close to market action, right? If we are using smaller than 10, then moving average is not worth it because we'll be probably hovering around the. Oops, sorry, I forgot to close my messenger. I would say if the moving average is below 10 periods, right, it will be probably hovering around price action, right? So it will be worth less to use. That's why I do prefer this 21, at least for daily trading, intraday trading, right? Besides, keep in mind that 20 is also the middle line of volume bands. So it's a very common indicator, and we are all seeing the same in the market, right? So if I'm bullish in this particular pair and I see a break to downside, a pullback, and acceleration lower, well, that is telling me the bearish momentum is increasing. So the buyers will be closing their positions, accelerating even farther that slide, right? And those sellers will be taking this opportunity to sell because of the acceleration of price, right? We are all watching how the pair breaks that terminated level and extends. It is the way. On the contrary, if we are talking about the long-term trends, right? We tend to use larger moving average like 100, 250. Those are pretty common also, right? I believe that one of the most popular is the 201. The 200 daily moving average, right? It's usually a very strong support or resistance. Simply, I believe because it is widely used, right? It's like a prophecy that fulfills itself, right? But I believe so regarding several indicators. That is also applies to Fibonacci retracement, for example, okay? Anyway, the idea of which moving average to use in which particular pair will depend on the time frame you are trading and the time zone you are, right? But keep that in mind. Most common, most popular, 50, 100, 200, this 21. Those are the ones that we are all watching. So they are, as I told you, self-prophecies, right? They fulfill their self-prophecies. Keep that in mind also. Anyway, there's a lot of tools we can use to determine support levels, and we will probably find one that fits us better than the other. I would suggest to use Fibonacci retracements only above 4-hour charts, right? As bigger the charts, as interesting the strength of the Fibonacci retracement. I do see that in, as I told you, European currencies, high yieldings also like Australian dollar, okay, tend to respect very much Fibonacci levels, okay? Those are the most reliable ones to use Fibonacci. Pivot points, I would suggest use pivot points with wide intraday movements, as I told you, like pound yen or Aussie euro, pairs like that, right? And when it comes to all crosses, I tend to use this 20 and 100 or 200 moving averages just as a guide in the daily charts and even in smaller time frames, okay? But that's me. That's not mean, that we all need to apply the same trading strategies, right? Search for the one that fits you better and test it. It's the only way to believe in what you're doing.